An asset is typically an object, a right, or an item owned by an enterprise that is intended for long-term use and can be identified individually in the balance sheet. Each asset belongs to a company code. All postings made for the asset, such as acquisitions, retirements, depreciation, and so on, are posted in the assigned company code. Note, additionally, you can assign the asset to a business area, a profit center, a segment, and to various management accounting objects like cost center, internal order, or work breakdown structure or WBS element.
The asset class is the main criterion when defining the asset. Each asset must be assigned to one asset class. In the asset class, you define certain control parameters and default values for depreciation and other master data. In the asset class, a screen layout role, an asset number range, and an account determination key are assigned. You can also create asset classes for intangible assets and leased assets. Functions are available for processing leases. Assets that do not appear in the same line item of the balance sheet, such as buildings and equipment, are typically assigned to different asset classes with different account determination keys. Additionally, there is at least one special asset class for assets under construction and one for low-value assets. Note, the plant maintenance or PM component is used for the technical management of assets. The treasury or TR component is used for managing financial assets. It is possible to structure components of an asset with asset sub-numbers and combine assets into group assets, typically not used in Europe. The main asset is always and automatically assigned the sub-number 0000, allowing the asset sub-numbers to be assigned as desired. A group asset has its own master data. Several main assets can be assigned to a group asset. Depreciation is calculated at the group asset level. This is important in certain countries, for example, in the US. The transaction type is an addition to the asset posting keys 70 debit and 75 credit. It has to be included when posting to an asset account. The transaction type is necessary for asset accounting. It specifies exactly where the asset posting is listed in the asset history sheet. The transaction type is the distinguishing characteristic of the various asset postings. For example, buying and selling, credit memos, acquisitions from internal production, adjustment postings, retirements without revenue, depreciation and depreciation.
Asset transactions such as acquisitions and retirements can be posted in various ways to meet the organizational and business requirements of the company. In assets accounting, you can post in the following ways. Without a vendor or a purchase order, the offsetting entries made to a general ledger clearing account. To a vendor, there is no reference to a purchase order. With materials management, use the following functions: purchase order, goods receipt, and invoice receipt.
When posting to accounts of two subsidiary ledgers, that is, to the asset and to the vendor, the reconciliation accounts of both subsidiary ledgers are updated in the general ledger.
The Asset Explorer offers an overview of the activities for an asset. You can use the Asset Explorer to display and manage the following asset-related elements. Posted transactions. View all transactions that have been posted to the asset. Asset depreciation. Display the planned and posted depreciation per depreciation area per period for each fiscal year. Transactions. View the details of accounting transactions. You can also switch the asset view inside the Asset Explorer, for example, to display another asset without leaving the screen. This slide shows the Asset Explorer screen. The expenses for assets under construction or AUC can be managed in two ways. With investment management, in the investment management component, you can create, post, and manage investment orders or investment management projects. These orders or projects are then reconciled with the AUC. The investment management component provides extensive functions for supporting investment procedures. Without investment management, if the investment management component is not used, the AUC can be posted directly in the asset accounting component. Once the asset is complete, you must perform the following actions. Create master data. Master data must be created if it does not already exist for the asset to which the AUC will be settled. Settle asset values. The values from the asset under construction account have to be settled to one or more completed assets. The costs are distributed to one or more assets with the help of a settlement rule. This rule specifies which percentage of the AUC is settled with which asset.
Closing in fixed assets or FIAA can roughly be divided into two types of work: legal requirements, mandates required by the government; technical and organizational tasks, preparatory steps that are necessary technically or that support the accounting organization. With the fiscal year or FY change program, the new year is opened in FIAA. This allows you to post to assets in the new fiscal year. The FIAA program to open a new fiscal year has nothing to do with the opening or closing of FI periods in general ledger accounting. In contrast, the year-end closing program checks the following issues: asset value postings, depreciation values, and periodically posted APC values or acquisition and production costs must be posted completely. Asset master record information. Asset master records must not contain any errors or be incomplete. If the year-end closing program finds no errors, it updates the last closed fiscal year for each depreciation area and blocks posting in asset accounting for the closed fiscal year. Note: the fiscal year change program is not executed at the same time as the year-end closing program.
You execute the year-end closing program of FIAA after the auditors have finished their work and before the GL is ready to close for the year. The year-end closing program is typically executed in Q1 before the books are presented for external purposes. In a calendar year, the fiscal year change program of FIAA is executed in December of the old fiscal year or in the beginning of January of the new fiscal year. At the beginning of the new fiscal year, a technical reconciliation is performed which compares the transaction figures between FI and the subledger FIAA. Afterwards, inventories taken and adjustment postings are made, should any corrections be needed. You can create one or more inventory lists for the inventory process. The lists are given to employees who perform the inventory. These employees note all deviations in the list and forward these to the accounting department. The employees in accounting enter the necessary corrections in the system.
The depreciation posting run posts in one run the depreciation of all depreciation areas to general ledger accounting. All types of depreciation, such as normal depreciation, special depreciation, and unplanned depreciation, are calculated and initially kept in the form of planned values in the fixed assets application. After the periodically started depreciation posting run, depreciation values are also displayed in the GL accounts and the financial statement. Besides the postings to the corresponding depreciation accounts in general ledger accounting, it is possible to post depreciation values to management accounting, controlling or CO objects, for example, cost centers, internal orders, or work breakdown structure or WBS elements assigned to the asset master record. Typically, the values of depreciation area 20 cost accounting are transferred to CO.
The asset history sheet is an important and compact evaluation possibility within asset closing. As with financial statements, the structure of the asset history sheet is based heavily on country-specific requirements. It is possible to create many different versions of an asset history sheet. The asset history sheet is a legally required report in Germany. However, the asset history sheet is a useful report in all countries, as it shows the beginning and ending book values of the assets and the transactions involved. Each asset history sheet version groups information into the following areas: book values at the beginning of the fiscal year, acquisitions, retirements, adjustment postings, depreciation, book values at the end of the fiscal year.